Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
Welcome to Black and White Market Chatter on Life Planning 101, where we believe investing is black and white. We believe in removing the emotional gray area of investing to make it possible to get the return you deserve. Our number one goal is to keep clients invested by providing a disciplined approach, education, and support. My name is Matt Irvin of Kennedy Financial Services. We are joined by our CIO, Aaron Kennedy, as well as an investment analyst, Sam Barker. Today we're going to go over what happened in the markets, some of the economic indicators, and talk about some stocks that have, I guess, performed, right? Yeah. Right, gentlemen? So we're going to kick it off.
Yeah, so I'll start with, this was as of Tuesday, 93% of the S&P 500 had announced their earnings for the second quarter, and so far at that point, 79% of them had reported positive earning surprises. 60% have reported positive sales surprises, so it's going pretty good for everybody out there. 93% of the company's blended year-over-year earnings growth is at 10.9%. So that looks pretty good. I'll let Aaron get into NVIDIA a little bit, but that's a big one coming up next week. Despite the manufacturing recession that we've had over the last 21 months, we have had rising energy exports and a booming service sector. So that's what's fueling U.S. GDP growth right now. And then the next part was about politics, so I'll just let Aaron go from there.
Yeah, the black and white political message for the day. No. Yeah, this is a great week. Great earnings season. Earnings have been really strong. That's the head-scratching part about the last couple of years is we've been in a recession other than the market's been up.
Yeah.
Other than what were we told? We cannot be in a recession if employment's doing this well.
Yep. Yeah.
But I don't know who all saw that, but they just restated 818,000 jobs completely wiped out.
Surprise.
All of the workers, and I know we've touched on that quite a bit. So just back to it, there's not a lot of things in the market that's really, really strong, or the economy, other than government spending and the market. Market has been so resilient. It's been crazy.
Wasn't that where most of the job growth was coming from, was from the government?
They were the number one employer for sure. It was somewhere like the government, then the service sector.
Okay, yeah.
So and then healthcare, I think, after that. And then it was a big drop-off. But the government's doing a very good job of employing people. That's where a lot of our spending comes from, and that probably needs to slow down and needs to get back in the private sector. It'd be a lot more efficient for all of us. But on the jobs, even though government was the largest employer, a lot of that was just part-time workers. People losing their good jobs, full-time jobs, and having to take another part-time. And if you take two, they were going to record that as two jobs gained.
Yeah. So, yeah, there you go.
Half the pay, twice the work, but hey, two jobs instead of one.
Yeah.
But big thing is the economy is weak right now. And Jerome Powell's at Jackson Hole right now, and he just gave a speech. And he said it is time for the tide to turn and have a different interest rate policy.
That's great.
So, yes, looks like interest rates are going to come down. We don't know how many times. I think the big picture, by the end of 25, we're supposed to be down to somewhere around 3.5%. It's supposed to go down and then start climbing back up to 3.5. I don't know how much I would put into that. The Fed has not been very good on interest rate projections. And I was reading something pretty interesting the other day of them only getting down to 3% or somewhere around in this first interest rate drawdown. I think there's only been 2 times in history that they haven't drawn down more than 5%. So if they can actually pull that off, that will be the soft landing, and everything's going to be blowing and going. But most of the time, there has to be a big change in interest rates to bring companies back to the market.
Yeah. Well, so remind me what it's at now. So how many rate hikes are they considering with that? Because I think what I was reading was they're looking at a quarter point at a time. So if they're getting down from current to 3, I think you said.
Yeah, up to 7. That's been about the most. But I think it's probably going to be a quarter to half September, and then we'll see from there.
If y'all remember, third and fourth quarter of 2023, the market just went on a tear because of the interest rate hike projections in early 2024. And then, or I guess the interest rate cuts. And then when that didn't materialize, correct me if I'm wrong, it started kind of weighing on the market a little bit for few weeks. Is that right?
Yes.
And so just, we can project out and have an idea on what they're saying, but how often are they actually right?
Yeah,
So,
not very often. And the market's already spoke. The 20-year is down to 4%, and it wasn't too long ago that it breached 5. So that's already down 25%, 25%. Market is moving. I think where's the 2-year at? Right at the 4-year, 4%, 3.98 somewhere. And then you got the 3-month at 5.2. Where you picked up some today? Wasn't it at 5.2%?
I got up to 5.3 is what I got
Gosh,
some today.
Yeah.
It's still so weird. Short-term rates at 5.3, and then the 2-year at 3.98, 4%. That doesn't make any sense.
3, let me see. Oh, that's the 10-year.
Well, and that's, you always talk about that, about you watch the bond traders because
Yeah.
they really have the most to lose. They're trading large volumes at such tight spreads that a quarter point makes a whole lot of difference
Oh,
for
yeah.
them.
Amen. Look at what happened in the Japanese carry trade. That dang near flipped the world upside down. The world, not Eastland, Texas. I mean, it was bad, and that was a 0.25%. So, yeah, the bond guys are usually the smart ones in the room. And, hey, wait a minute. Didn't Sam do our bond trade not too long ago?
Oh, there you go.
Yeah,
we got a smart guy.
He took us long not too long ago. We made a
there's
good
a
little
button.
allocation
There's a
to.
button for that, right?
Don't do it.
Maybe, yeah, there it is.
Now, lots of people are on that page. We're about at the end, and people are stretching out their duration a little bit. So they're buying longer bonds. You want to buy those longer treasuries for actually equity protection. And just the 10-year and everything else has been beat up so much, so people are getting back into that trade because it's about time. If the Fed's going to lower interest rates, that 5.3, the 3-month, that's what they can adjust. The market takes care of everything else,
Right.
and the market's saying it needs to be a lot lower than this right here.
Well, and, not to get political at all, but whenever we start trying to control what the market dictates interest rates should be, as the government has been doing for so long, it's a little bit like trying to control how the economy works. And if you've studied history at all, usually the government trying to manipulate and control the economy to avoid, bad situations usually doesn't help in the long run. It may make it easier for a little bit, but I just think that if we could get back to, and this is more of a pipe dream, but back to the market dictating what interest rates and risk should cost and should be, that would be ideal.
That is a brilliant thought, and you hear a lot of that out of the libertarians. Why in the world do we need the Fed? Because the market's going to take care of things. It's a manipulation, and it causes people to fixate or attach themselves to one rate just because the Fed says it, and it doesn't work out. It doesn't work out. Maybe there is some control on the downside to help banks and everybody else bring down their interest rates, give them some extra incentive there, but it's another government agency.
Yeah. Well, and you think about it, though, sometimes, and not the sophisticated investor, but, the average person, when left alone with their emotions, makes irrational decisions. And so I'm not necessarily defending a heavy-handed Fed, but on the flip side, if you soften that, at least in the news where most people are dialed in, you can avoid runs on things, that completely irrational behavior,
Yep.
so.
Here, I've got an idea. I know it's yelling at this time, but the Treasury,
Okay.
they're buying back bonds left and right. do we need the Fed to say, hey, we're lowering interest rates? Or does Miss Yellen come out and say, hey, I'm buying back the 10-year for this interest rate?
Right.
Boom. And it's done.
Right.
Eliminated an entire part. Now I'd rather get rid of the other one instead of the Fed, just because they put out some pretty cool research.
The data. Yeah.
Yeah. Not always true, but they put out some good stuff.
Yeah.
So anyways, back to economic picture. Fed's lowering interest rates. Everybody's jumping on board. Had a great week. What was it? Was it Tuesday? No, Wednesday the market started coming down, and today it reversed. Everybody got what they wanted. So big bounce in the market. We were up between 1% and 1.5% for the week.
It's great.
So everybody's jumping in. Small cap trade popped back up today. Small caps were up big, 3%. And if this is right, we've been in a recession, we can acknowledge it, and we try to climb out of it. That's who's going to benefit. Small companies, value companies, everybody else that hasn't participated so far, like everybody other than the Magnificent Seven.
Yeah.
So it's going to be a good time, very good time. This week we had a couple of our companies come out. Lowe's came out. They beat on the earnings side. Fantastic quarter. They're a little bit low on the revenue, like $350 million, somewhere around in there. Not a big miss, but just a little bit lower. TJ Maxx, they came out, beat on the earnings and revenue. Another fantastic company, and we can really see what the consumer's doing with TJ Maxx.
Yeah.
Because you can find some fantastic clothes there, kitchen items, everything else.
Right.
My wife drags me there all the time.
So is that an indication that people are buying cheaper or people are spending more? Kind of what's your opinion on that?
I think when times get tough, you don't want to change your lifestyle. You still want everybody to look at you and see you the same way. And heck, if I can go to TJ Maxx and buy a brand new polo that came out in 2023, and the only difference in my shirt is it's a little white horseman instead of a green one, I'm going to take that all day, especially if I can get it for 40 to 50% off.
Yeah.
And it's a conscious choice to go to TJ Maxx. So instead of just running to Amazon and picking something up, or that's a cool shirt on TikTok and doing it, no, I make the choice to go buy two of those things at TJ Maxx, and they just get stronger when the consumer doesn't, is not as confident.
Yeah. Those alternative goods, right?
Yes.
Kind of seek that. Well, and you mentioned Lowe's, and just my mind kind of thought about, too, you said the earnings were off a little bit than projected, but the housing starts were off, too.
Yes.
And so you'd see that, and that makes logical sense there.
Well, earnings, they still beat on earnings.
Okay.
So the operations of the business were fantastic. Revenues were down. And revenues are kind of tough to pick.
Yeah.
And they are so big. So there's not a lot of concern there on that kind of revenue miss. I actually just pulled it off. We haven't had a chance to dig into their finances. It could have been accruals. There's no telling what could have happened on
I
the
got you.
revenue
Yeah.
to miss that. It might not be anything. Next week's going to be a big one. NVIDIA's coming out. So that's Wednesday. That's going to be the company that drives the entire market.
Sure.
So we're going to see huge jumps, or NVIDIA's going to fall apart.
Yeah.
Expectations are they're going to double again, and they're working just great.
Right. They're very
firing
efficient,
on
right?
all cylinders right now. And I think the only thing that slows them down is our utilities. You can't sell too many $30,000 chips if we don't have electricity to run them. So I think that's where the rubber meets the road, and we start to see things slow down when there's just not capacity for it. But it's going to be a big week.
Yeah.
It's going to be a very,
Well, it's
very big
exciting.
week. So running through here, I want to talk a little bit about FOMO and missing out and just losing sight of the big picture.
Right.
And just a little bit of a story time here. We've had a company in our portfolio, it's Lockheed Martin. I really like defense. What other industry out there does the government give you money? They do not hold you accountable for anything. you can be late with delivering your goods for decades, and they still pay you more.
Right.
It's defense, and this Lockheed's a great company. I think their return on invested capital is about 26%. So all the things that all the inputs that they have, they're making 26% on all of that, and what we look for is anything greater than 15. So fantastic company.
Yeah.
They have about $71 billion in revenue, so lots and lots of money coming in. And at the end of the day, their bank account increases by a little bit north of $6 billion. So lots of free cash flow. Now, like you can expect, it costs a lot of money to make these weapons and things, and their capital expenditures are almost $2 billion. But, that's not the only thing we look at. But just think, if you spent $2 billion to make $6 on free cash flow, that's not a bad deal. No, it's really, really good.
Yeah,
actually.
right. That's
So,
great.
Great, fantastic company. But just looking back at some time frames from November of 22 till middle of this year, that stock was down about 9%, and still company's still performing just fantastic. So we're looking at it and saying, hey, well, people aren't willing to buy it right now, but the company's doing everything that we've wanted it to do. And this is where the human mind really messes with us. I've had conversations with people about a stock being down over a couple weeks span or a month, and we're trying to hold these things for 30 years. So we have bad months, we have bad weeks, we have bad years in the stock market. And all it means is there's more people selling the stock than buying the stock. That's all it means. And you got a company like this that is performing like this as a going concern company. I don't really care what the stock market does.
Mm-hmm.
It's not a popularity contest. Well, it is in the short term.
Right.
But we're looking long term. We want to, at least if we can hold on to these companies that have these huge returns on invested capitals over a 20, 25-year span, we're going to get 100 times our money. If the company can do that, not the stock, the company. So looking at it from a week to a month to even a year, that's very, very short-sighted. But when it comes back to Lockheed Martin, coming about the middle of July, that thing popped about 16% just since that date.
Wow.
It's up over 25% since its lows. And I just wanted to bring that up because, if you're in our quality growth portfolio, you can see the individual names. And I have people, why are we in that? That's red.
Right.
Don't worry about that. Let me show you what's not red about the company. Mm-hmm. And hopefully I'm showing you everything else except the stock price.
Yep.
So. And really quick, regardless of the revenues and earnings and things, or not regardless, but aside from maybe, there's going to be a natural gravity to the stock price. Investors have to sell shares if they want to take that money and go buy something. But investors don't have to buy the stock, So to me, it seems that it would be logical that there's a natural gravity to a stock price to fall because people are, living off these stocks in retirement. They're selling the stocks to go buy things, put their kids through college. But
yes.
You don't have to buy those things in order to survive. And so it seems to me that there would be a natural selling pressure just based on people's everyday life.
Yeah, that's a great point. I was actually reading something today, and they were talking about BDCs. And BDCs are business development companies. They loan money to smaller mid-market companies that just aren't public. And this guy was talking about how to construct your portfolio just to live off of income. Mm. And he was talking about the artificial dividend, which is what Sam was talking about. If my stock goes up 10%, I'll pull 4% off as my income and keep running. But we've known that, but I've never really put it in perspective as, hey, this is always downward pressure. And, if interest rates are coming back down, we're moving away from that. I'm making 5.3% on my short-term CDs and taking the income. No, we're going to get back to the artificial dividend of being in the market and selling off your income instead of just living off living off the interest and dividends.
Right. Right. And it always makes me think back to, there's kind of a story on perception of wealth, right? When, because wealth is made over decades and lifetimes, not in days and weeks, and if we're waiting to see what happens tomorrow, we have a very poor perception of wealth, right? So when we think about, hey, we need to let this thing cook or develop or grow or kind of manifest, it's like that's a good perception of wealth. So it's kind of a catch for ourselves, right? We we hold each other accountable, right? To say what's your perception? Are we looking at it in too short a time frame? Because you can pick any time frame and it's going to do great or going to do poor.
Yes.
And that's kind of our frustration sometimes with some of the data that comes out, right? Is they give you the best, most glamorous time frame. It's like, yeah, but if you would have added the month prior, it would have looked a lot worse,
Yeah.
or
think
whatever.
When they hold that standard to us, they call it cherry picking, but they don't follow
There
the
you
same
go.
standard.
That's
Yeah.
right. You can disclose everything, right?
Yeah.
That's exactly
So,
right. For
Anyway,
some reason, a lot of the podcasts that I've been listening to, they've been talking about winning, or what percentage of stocks do they win on? And who is the guy that did was it the Magellan Fund or, this isn't good. A very, very famous stock manager in the late 80s and 90s. He wrote several books and would say, only buy things you know. Notice what people are wearing on their feet. Who in the world was that?
I love the questionary. I do not have an answer for you.
I can't even remember where
I
I
probably
was
got
going with
a
that.
button here. It's like, wah, wah, wah. No. But, well, you were talking about perception of winners and
Oh, yeah.
Yeah,
If you can get 50% of your stock picks right,
right.
you're going to keep your job.
Yeah.
You get 60, you're going to go in the Hall of Fame, and people are going to know your name other than me. I'm not going to remember
Well,
it, but...
But you think about it like batting averages, right?
Yeah,
Say
yeah,
batting
exactly
1,000,
Batting
nobody
average.
bats 1,000, but batting 200 or
Yeah.
300 is pretty dang good.
Exactly.
And that's really meaning you only hit 20 or 30% of the balls that are pitched to you.
Yeah.
So
So just like this, and going back to Lockheed, it would have been very difficult to hold on to if we didn't have other winners in the portfolio to, I don't want to say mask, but push it up. Investing is the same thing as almost anything else. Your portfolio is going to be driven just by one or two names. Everything else is going to be market or way below.
Yeah, look at Warren Buffett over the past decade or 2 decades. He's been driven by Apple primarily.
Yeah. Apple. And before that, Coca-Cola, American Express. Just a handful of companies is what drives your return. But that's a very good thing because psychologically it can give you time for these other companies to be noticed by the market and start taking off.
Yeah, that's really one of the biggest risks that we have is the patience, right? Because if you're red too many years in a row, you're not going to be in business very long.
Right.
But if you can allow that to kind of grow and develop and support, but that's where the diversification. But isn't it like what 15 stocks could be perceived as a true diversified portfolio? Something very small.
Like 8 to 12.
Okay,
actually.
8 to 12. Yeah.
I don't recommend that.
Right. Yeah. We have a little bit different plan. But by the book.
Yeah. We're looking at this little software that does momentum, and we were talking with him about where this program sees how many holdings, and he's like, don't go to 10.
Yeah.
You can have some fantastic years, but you're going to get that 1 year, and it's going to hurt.
Yep. And it could be completely disconnected from performance like Lockheed was.
Yes.
Right? It's just that somebody truly just sold the stock, and it could be somebody that retired, or whatever.
And just think the longer we're in this technology age, there's so very, very few people that are investing on themselves. There's so many computers making these decisions, and computers are great cheaters. You see what the computer's doing next to them and do whatever they do.
Right.
This is more momentum stuff, so sell. And it takes a lot to get that computer to start noticing buys. So.
Yeah. Yep.
Crazy times.
Super interesting. Well, so we're getting close to time, but I want to see, is there anything else you want to go over today before we wrap up the episode? Sam's got his hand up, ladies and gentlemen.
If I can touch base on one thing, and without sitting on one side of the aisle or the other, I just want to know, and this is a curveball, Aaron, but if Kamala Harris does institute the $25,000 down payment assistance for first-time home owners, what does that look like for home prices, real estate prices, and things like that? Are we going to get kind of a home price inflationary spiral? Or I know that I've actually received a recent call with this exact question, and I wasn't sure what to tell them. So
Yeah, just go back and look at 07, 08. There's a lot of free money in there. What were those? The ninja loans?
Mm-hmm.
No income, no job. And what if everybody can go out and bid on whatever they want to, prices start going up.
Yeah.
Now, right now, interest rates are hurting us a little bit. So from a cash flow standpoint, it's a little bit difficult. But if interest rates come down, the Fed does this with interest rates, mortgage rates are going to come down. And if we have more potential buyers, that's going to push housing up. And that's going to be very interesting. We were just looking at that. Help me walk through all this. I'm not going to get the numbers right, but home construction down 30%.
Mm-hmm.
New home inventory down 25%. I'll put it this way, amount of money spent on homes up 30%.
Yes.
So nobody's selling. Builders are sitting on their hands wanting to build.
Yep.
But the few people that are getting such outrageous prices that it looks like the market's healthy, and it's not.
Yeah.
It's not.
Well, and it may, I don't know what this has to do with what's going to happen, but I know lumber is coming down, or at least it has come down a long ways, so maybe that can help alleviate some of those issues.
Yes, lumber come down. Hopefully copper goes up.
Yep.
Not if you're building a home, I'm sorry. I shouldn't say that. But we own a little copper, so I wouldn't mind those prices going up.
Yep.
But we do need, it's a double-edged sword. Anytime you're looking at commodities and commodities get hot, that means we're using a lot of it. So, we're not going to be using a lot of oil in a recession, or lumber in a recession, or copper. What is it? What's the name for copper? Dr. Economics or Dr. Copper?
Yeah, and you said it before, and I was thinking, yeah.
Copper is one of the biggest building blocks for our economy. You just name one thing that doesn't need wiring or anything else.
Yeah.
So when copper's going up, that means we're building like crazy. So if you wish for lower prices, you're going to have lower output. So maybe we can just figure out how to balance it out.
Well, that's where the soft landing comes in.
Soft
right?
landing. Here we are. We're there.
Yeah, we're there. So, well, that's great. Thank you so much, gentlemen, for joining us today. As always, wonderful content. If there's anything you have questions about, please let us know. Call Sam. He's welcome to your calls.
Always.
Yeah, no, it's great. We want to hear, is there any topics you want to learn about, or just some feedback, right? Always open to that. So if no other words, we'll wrap up today's episode of Black and White Market Chatter on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Don't forget to learn how our sister company can assist you with all of your tax, bookkeeping, and consulting needs. You can find out more at briscoeandassociates.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.